The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 3rd, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have a great day, an extraordinary weekend? And you know the easiest way to do that, it's to always remember that life is happening for us. That's right. It's happening for us, not to us. And when you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that the world is going to toss at us. But today, you and I, right here, right now, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. That's right. You can dial in at 877-927-6648. We've got a second method. You can always reach out to me by email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, any and every ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 189 points at 0.7% to the upside. 0.9% to the upside is the S&P. That's 26 points. NASDAQ 100 up 1 3/10%, 103 points. Russell is having a good day as well, up 1 3/10%. That's 21 points. The upside trading out at 1604. You've got all of the indices in the green. Spot volatility index well below its 50-day exponential moving average, down minus 9.7% out there. You'll want to watch the end of day reading. If there's a 1-day volatility rate of change below minus 10%, that's where it always gets me. So minus 10% or less than that, today would be an initiation move to higher price in the S&P 500. So watch that 1-day rate of change. Right now, it's minus 9.71. We've got gold up 970. It traded right into resistance. We'll see if it can take that level out. Silver is up 25 cents, 1 3/4%. Trade out at 14.79. Light sweet crude up 34 pennies. The big mover and shaker to the upside, Mercado Libre up 103 bucks. That's 21% to the upside. I believe that is after earnings. Amazon's up $60 or 3%. Booking Holdings up 20. But Sam Adams, Boston Beer, that's up $20 or 6%. Some big movers to the upside and shakers to the downside. 14% or 42 points for Arista Networks. Monolithic Power is down 7.5% or 11.50. Legan Pharmaceuticals off about 8% or 10 bucks. AutoZone up less than 1%. That's $8.50. So plenty to look at. But we are going to look at our first request that came in. This came in from CJ. Charles writes in and says, what do you see as a buy price for 3M MMM? I'm looking to hold it for 3 to 4 months. Thanks for your help. Really appreciate the show. I really appreciate that you really appreciate the show. So thanks for writing in, Charles. And let's first begin by taking a look at for some TAS market profiles out here. Daily, weekly, monthly. Daily, gone. Nothing exists as we speak. Weekly, below the bottom of that. And what you and I are doing here, Charles, we're looking for support. We're going to go look for a bottoming pattern, but we're looking for support. Daily and weekly prices trading below support. On a monthly basis, and clearly the month just began, but prices trading right at the bottom of its monthly profile. It's 185.07. We're trading at 184.51, so we're slightly below that. The bottom of the quarterly profile is 173.44. The message here with regard to where price is trading in relationship to 4 different time frame profiles is that price still wants to move lower. 173.44 would be the number. If we take a look at the daily time frame, Stevie's other charts, my E-signal, my Ninja Trader charts out here. Hey, look, a couple days ago you had a hammer candle. Prices below that. So, if you're long, you're wrong. We know that. I don't see any pattern out here on a daily time frame. Today looks like it will be day number 7 of that TD setup 9-count pattern. But we need a few more days to be able to confirm that pattern out here. So at this stage, your question specifically is, what do I see as a buy price? I don't. Now, it's possible that what 3M is doing is going to pull all the way back into the swing point here from the trading session December 26. It's trading into that level. And so, therefore, that's likely where it's headed to. Let's go to our other chart. Let's take a look at some volume metrics as price does that specifically. We're looking at the December 26 swing point, which had 2.9 million shares. Well, son of a gun, you're pushing into that swing point with volume out here, Charles. You're at 2.2 today. So clearly, or not clearly, but it sure appears we're going to do more than 2.9 million shares. This would say the December 26 level is going to get tested. That would be 176.87. You asked me if that was a buy price. I don't know. We would need to see how that gets tested, if it gets rejected, if it's with lighter volume, if there's some new profiles maybe that form at that time, and what other pattern might be in play. So at this stage here, I think with regard to 3M, just sit tight, continue to look at it, but look for some bottoming signals, none of which are present right now, and price is moving into a swing point with volume, always a suggestion that price wants to move lower. The second question coming in from John F. John from Sarasota. He says, hi, Steve, what do you see with ROM long term? ROM is the ticker symbol. So let's go put that up. Let's see what that is. The Ultra Technology ETF out there. So actually the first time that I've heard it. John, if you're asking me, what do I see? And that's what you're asking me. Here's what I see right now. I see the price is back above its the bottom of its daily profile. That's 124.29. So it's back into support. This next level of support resistance is so it's back above support. Resistance next level 126.30 to 128.30 out there. So that's what I see as we speak. That's what the daily time frame shows. I showed that it formed a top out here, staying with the daily. It was a TD setup 9 count. We know that that can generate a topping signal on day 8, 9, or 10, or bar 8, 9, or 10. This was bar number 10 out here. So that is a topping signal. Support, further support, even though we use our TAS market profiles, I would say April 12th is a key level of support on any push to the downside. And there may be an A to B equals CD to the downside that is setting up. I don't know. But you would be looking at 117.93 as a possible area for support. So on the daily, we see the topping pattern. Price was pushed down to support. It is holding that level as we speak. So whether there's an actual top of significance or not, I don't know. Support needs to be broken. Yesterday was a break of support. Today's back up above it. And that says, okay, so that was a false break to the downside. On the weekly time frame, I don't see a topping signal. This would say higher price. And the monthly, that's the exact same situation. So it looks to me like ROM is headed to the top of its daily profile. That was 128.30. John, good to hear from you. Have a nice weekend. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And all I can say is, wow. Wow, because through a combination, an effort by Brent, one of our listeners and callers. Brent, hopefully you're listening. If you are, have a great Friday. But it's U.S. He's on the phone. You got to, oh, man. How cool is that? Hey, Brent, how you doing?
Doing great, Steve. That was a nice little intro. That was perfect timing.
Yeah, no kidding. Now, what I want you to know, your ears were burning because of John from Philly in the Tiger's Den, who ever since you had called about U.S. Steel, ticker symbol, folks, is X out there, he's been watching it. And he got into a trade here this morning and made everybody aware, including me, of the island bottom pattern that is formed out there. And Brent, before I go to you, I'll just describe the island bottom to folks out here. That was formed over the last 3 days. If you take a look at the trading session, folks, of May 1st, you'll see that the low was 1527. The high of yesterday was 1484. And the low of today is 1488. By 2 pennies, we have a slight little gap there, and that creates that island bottom pattern. Now, Brent, in addition to that, and I don't know if you were calling about U.S. Steel, but in addition to that, and I don't know how this works, if we take a look at the patterns on the daily time frame and we begin doing our wave count from February 21st, yesterday was wave number 7, or letter G. Yesterday was the bar following bar 9 in a TD setup 9 count. Today you got big, huge bullish reversal signal in addition to just the gap up. That's certainly a bullish candle. So that looks good. And then on a weekly time frame, you can see how this is a key reversal session from a weekly standpoint. That is a bull sash candle as well. And on a weekly basis, we can see that price was moving lower, doing less relative energy. And in this case, on the weekly basis, we start our wave count to the downside March 2nd, 2018, and that puts this week into wave number 7, letter G out there. So, Brent, your work combined with John and Philly, it's amazing. Now, I don't know, did you see that? Were you calling about U.S. Steel or something else?
No, that's what I was calling about.
Yeah. So on the weekly time frame, what you'd love to see here, it doesn't have to happen today. It's next level of resistance is, what I refer to as Stevie's red line, and it looks like it's at about 1670. We're at 1669 as we speak right now, so really close to it. You'd love to see that level get overtaken, but quite frankly, U.S. Steel today's action, that all those patterns. I mean, how do you not take a stab at it?
Yeah, I got into a couple of things this morning. One that I'd love to do, and I've been doing for a while, is when they have weekly options.
Yes.
Which most stocks that trade any kind of volume have.
Yes.
So this one, I was able to get in the 15s this morning for really cheap. They're 25 cents a piece.
Wow.
And of course now they're up at at least $1.60 or something. So quite a bit of increase in value there. And then I did pick up some shares of it too. I mean, it kind of gave you even though the earnings came out yesterday afternoon, and you could see they were positive on both the earnings and revenue, it didn't react that much this morning. It gave you an opportunity to kind of get in there if you happen to be up and willing to trade the thing. So that worked out good. And I wanted to just go over it with you again. You've kind of course, done a good job of that, and I noticed that too. The 1484 was the high of that previous day, and then the low of today is I think 1488. So there's still a little gap there.
I mean, this is one for textbooks. Assuming that everything holds today, and there's no reason to think that it won't. And the other nice piece of news, as we take a look at the black background charts on my screen, those are the ones where I'm showing the daily, the weekly, and the monthly set of profiles out there. And there was a new profile that formed. It was a bearish structured profile, meaning that the center of the box at 1626 was slightly closer to the top of the box, which is 1665 versus the bottom at 1568. And price is now trading. So it's a bearish structured box. When you trade and you close above, and I don't know if price will close above. We're trading above it right now, but there's nothing more bullish than a failed bearish message. And that, in essence, is what you would see here with a close today above 1665. But even if it doesn't, it's just got everything that you could want on the daily and the weekly and even the monthly chart. It's not the monthly chart that shows the potential of a bottom. It happens to be the quarterly TAS market profiles that are out there, and that was at 1423. I think the actual bottom was 1416 this morning. And because that is a bullish structured profile too, with the center being much closer to the bottom, at the center line there's both buyers and sellers, but we think it's overrun with buyers because it's so close to the buyers at the bottom of the box at 1019. So really, this is a textbook. Hopefully it works so that, we put it in the textbook today and we come back to it. But this could be a pretty major bottom out here.
It's looking good so far.
Yeah.
The only other thing I was calling about, Steve, I just wanted to comment, and this is not, blowing smoke or anything. I've always appreciated your positive attitude on everything. I remember listening to you way back when you and Tom used to do the show together.
Yeah, that was a lot of fun.
Always appreciated when I'd be on my way to work. I'm retired now, so it's not the same scenario, but it just was nice to have somebody out there with, giving that good positive vibe on the way to work. And you've always been that way, and I appreciate that. And of course, all your help with the charts and the technical side of things. So just have a great weekend. Thanks for all your help, and just take care of yourself, all right?
Well, you bet. Thank you. You're welcome. And thank you for those kind compliments. And the cool thing about this Tiger Nation is we're all on the same team. So it's a great community, and you add to it, and everyone inside the den, really appreciates all the hard work that you do. So you've made some folks some money. That's a beautiful thing.
Well, that's always a good thing. You take care, Steve.
Okay, take care. That was Brent in Martinez, California. And John, to you in the Tigers Den, kudos on picking up on that trade as well. And folks, I'd have to say, there's, there's not a reason to not get into that trade as I see it. Maybe it pulls back, but you've got everything that you want there. It would just, if you got into this trade now, what you need to do is just proper position sizing. It's all about position sizing in the end. You see Brent and John and I and you, we can't really control, well, not really. We can't control what the markets are going to do. We can only control what we do. And the objective of this business is to stay in business. Look, those of you who are entrepreneurs who've ever opened up the door, you know that your first objective in business is to stay in business, right? And that is also the case of trading and investing out here. And the easiest way to stay in business is make sure you have the proper position size. And that just means whereas Brent and John, from a stop standpoint, had a benefit that you and I don't have right now at 126, our stop just needs to be below the low from yesterday at 14.16. That's a $2 and some odd cent low on something that's only 80-cent average true range. It just means there's fewer shares you would have in your portfolio to have a proper position size. That's all. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 208, S&P's up 29, NASDAQ up 117. Let's go on to our next question. This one coming in from VM. And says, good afternoon, Steve. Please share your thoughts to go along UNH. Learning a lot from your radio show. Well, that's great. I am glad to hear that. And let's go take a look at United Health. Your thoughts to go along United Health. So let's first just take a look at what we know. So the daily setup profile shows that we're trading within a range here. Price had gotten up towards the top of the profile a few days ago at 239.70. Sold off. It looks like that was maybe the Tuesday sell-off versus the Wednesday sell-off. Either way, but nothing's been broken here. It's a bullish structured box, and 226.06 is a level of support. Is that good enough for you to go ahead and step in and buy? I don't know. We'll take a look at one of the other charts. Resistance-wise, what's happened this week, and really not the positive thing that you'd like to see from United Health, is that the bottom of that weekly profile at 238.31, and our actual high this week so far has been 238.08. Has been resistance, and it's been resistance for the last month, for the last 4 weeks out here. So we're going to have to look at our other charts, VM, and really find a good signal that says that the bottom is in, and the monthly time frame isn't really providing us with enough information. So back to the daily now. The other set of charts out here, and prices pulled back to Stevie's red line. I haven't spent any time talking about these dash blue lines. I'm still kind of perfecting it a little bit, but it's a real resistance level. It automatically gets drawn on my system. So I don't draw them. They're already in there. But you do see how good they've acted as resistance here. The actual high that we saw this week was right up against that area. So for me, I would say that price would need to close above. If you're looking to get long, you'd really want to see price close above that 238.01 level. You're at 231.72. So for a $200 stock, even though it would be a higher price, I would wait for that. Although prices found support at Stevie's red line at 228.93, it's red. And that says the price oscillator is below zero. And if it closes below there, that says we're going to lower prices. If I do a wave count from the most recent high, we get to number 6, wave 6. But, you know, we like to sing in the key of G or wave number 7. So that's not the bottom. No real bullish candlestick here to go ahead and say the A to B equals CD pattern had completed. That's the daily time frame. So that just says maybe more caution. Maybe what it means, VM, is that the politicians aren't done with kicking the schnot out of the healthcare sector out here. The monthly chart is not showing us any reasons to be overly bullish here as we speak right now. So I think with regard to United Health, and you're wanting to go long, I take more of a conservative approach. Continue to watch the patterns as they unfold, or if this thing breaks out, that's a different story. But so far it hasn't, and so let's go with the information that we've got right now. So I'm glad that you're learning. Really, that's what it's all about. I mean, the reality is, look, each of us were attracted to be right here, right now, or over our lifetime with inside this TFNN community to learn. I mean, the very first time I listened to TFNN, it was really about seeking out information to want to be able to learn about technical analysis. And that's coming from a bean counter that where I thought I knew, with regard to the holdings that I had, just about everything that you could want to know, because I could understand the balance sheet and all the SEC filings and the management discussion and analysis and what the balance sheet looked like. And so that stuff was easy peasy stuff. But what I found was that I don't care how good the balance sheet looks. I don't really care what the earnings were compared to the last quarter or the last year at the same time, whatever it might be. The reality was the most fundamental aspect was what buyers and sellers are doing. And when we just step back and we analyze what they're doing, it allows you and I to time the markets. The fact that anybody out there, really, the mere fact that there are professionals professionals, yes, and I'm speaking to you as money managers out there, that there are professionals that would believe that you can't time the markets, is so that they should not really be allowed to be in the business. That is like saying to a football player or a hockey player, an athlete, that you somehow can't time the pattern out there. Hey, get out of here. You know, the reality is that when we take a look at the stock market, take a look at these TAS market profiles, or wave number G, or TD setup 9, or the Rhodes momentum indicator, tops and bottoms out there, all they're doing is reading the emotion of the market. We let sometimes our own emotion get in the way. If we don't do that, we'll be a whole lot better off. Look, for all of you folks that are short out there in the market, best of luck with that at this stage of the game. I'm not saying that you're wrong, but until support breaks, you could be on the wrong side of the trade out there. And we don't have any breaks of support in the ES Mini. The support, as you and I know, it's 28.94. There may be a new level of support that forms over the weekend or Sunday, Monday out here. The NQ price is above every level of support. It's above resistance out here. The Dow, which had the failure yesterday, turns out that was a false breakout or false breakdown to the downside. And the Russell 2000 is taking out previous highs out here. So just the use of the market profiles is extraordinarily helpful. Those are easy to see. Those are just horizontal lines that are automatically drawn on the screen of your charting application, as long as you subscribe to the package that is out there. So we're all here for education. I'm glad that I can provide you with some additional information for you to consider to improve your trading. All I did was take the stuff that folks provided to me, or that I sought out and wanted to learn, and tried to figure out how they use it and if there was a way to make it better out there. There's always a way to make things better. Otherwise, you know, I'd be doing this show. Well, I wouldn't be doing a show by an internet, if you will. Okay, so enough about that. Although you can never really have enough about that. We got a minute. I'll finish it off this way. So there's several restaurants that I frequent, and one of them in Palm Beach, I've really gotten to know one of the servers there. Great guy, was really big into the digital currencies, Bitcoins, and as Bitcoin was coming into the CME, CBOE, came into the futures market, I was cautioning him that to be very careful out there. We were starting to get information that there was a top that was forming, price was moving higher, doing less relative energy, and a young guy. And, you know, unfortunately lost a bunch of capital, but still has some, so that's cool. Finally, he had the opportunity this morning. I spent the entire morning with him, wanting to be able to show him, let him pull up any instrument that he wanted, the same tools that you and I get to use here daily, so he could see how using those tools would have assisted him in making decisions back then. And really, he was blown away. And just the ability to touch someone else. And so if you're learning, you've got to have friends and family and folks, you know, keep tuning them in to the folks here at TFNN. Let them subscribe to newsletters and get education and so forth. That's what it's all about. It's only 3 ways to accumulate wealth, and the stock market is one of them. Or the markets in general, I should say, bond markets too. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. What's on our screen right now is the 1 hour time frame chart for the gold contract. And Peter in the Tiger's Den was asking if we've learned anything about gold. And I wrote in there. And so you and I, we placed this little descending trend line on this gold chart a couple of days ago. And all we did was we used that 7th wave high, and we used the TD setup 9-count high as really our points to denote that descending trend line. Now on the Fed's release of their minutes or during the interview, what have you, there was a big spike in gold, but we can see that that spike was contained. It was really always about, this is a 60-minute chart, so it's about the body of the candle versus the wick, the upper or lower shadow, because those are just the extreme emotions. And so the body of the candle on that hourly session closed below that trend line. And I was watching this live as I was helping to share. The individual's name was over here was Powell. As I was helping Powell just understand these tools, how they work. Not that they work 100% of the time, but they increase your probability, especially when you're looking for a top or a bottom. Very much like Brent and John and the Tiger's Den were when it came to U.S. Steel out there. It's just so helpful. And so we were watching this live. This screen happened to be up just while we were taking a look at different patterns and describing what they all meant. And we were watching gold go up, break above its TD-ST line out here, saying, okay, it's going to higher price, but going higher to where? And, of course, we said, well, going higher to that trend line. And dang, if price didn't stop there. So why? Geez, Peter, I don't know. But it did stop at that trend line. A bullish thing would be to eventually pull to blow that out, but it hasn't so far. That's just a 60-minute time frame, and I'm not saying that gold hasn't bottomed because, look, it had that Rhodes momentum. We talked about this yesterday. Maybe it was Ruby in the Tiger's Den. She was searching for a bottom. We said, yeah, we see the bottom on a 60-minute time frame. Most certainly. It's got that Rhodes momentum indicator bottom out there on the 60-minute time frame, and we looked at some other profiles and things of that sort. And if we go take a look at gold, see if we've got this chart up here for gold. The candle or the bar today is turned orange. Says we may get a new profile on Sunday, so that would be nice. What price hasn't done today, Peter, it hasn't taken out resistance, which would be the top of that daily profile, and that was at 1285.50. We got up to 1283.90. So and here's got a little bit different trend line. If we were going to draw a trend line here, it looks that price that gold would need to get above is probably the 1301-ish type area. So that's a little bit larger trend line than 60-minute. But I can share with you that it sure looks like gold is trying to form a bottom, or maybe it has formed a bottom. And some of that work here comes from the weekly time frame chart. You've got that TD setup 9 count. What it doesn't have out here, Peter, and everybody else, is it's going to eventually need to close above its Stevie's green line, and that's at 1296.50. So that's a real resistance level on a closing basis from a weekly standpoint. But you got that 9 count. You got reasons to say, okay, that would make sense to go take a look at a long trade in the 60-minute. That says pretty good. And then if you take a look at the daily time frame, wave number 7, letter number G out there. So all looks pretty good, but it is not out of the woods. The Goldilocks is not out of the woods as far as I see. Question here, does the daily chart, has it completed a 3 drive to a bottom pattern? So let's go take a look at that daily time frame chart. And I suppose the one that you're looking at, maybe I should just read your whole thing, but is this in essence here, John, what you're drawing in as a 3 drive pattern? Is that in essence what you're drawing? So if that's it, I don't see it. And the reason I don't see it is because we really don't have a 3rd drive, so to speak. Let me get rid of this. Maybe that wasn't the one. I don't know. That's the one that I see. I don't see as a 3 drive to a bottom because the low from yesterday should have extended lower. It should have been it's easier for me to show it on this chart here, or let me do this. Let me come take a look at this. Let me put up the gold contract. And I'm just going to share with you, here's the daily time frame. So what I would have liked to have seen if it was a 3 drive, using those swing points, those are the only ones that I could see to really use out here. See, we got the extension. When I say extension, the Fibonacci extension, let me get that tool up here. The Fibonacci extension between the swing point from the low of April 4th to the high of April 10th. And you can see that was a 1.618 expansion. Didn't get right to it, doesn't have to get right to it. So that certainly qualified, let's say, as the 2nd drive. The 1st drive was the swing points that we use, or the low of April 4th. And then if we take a look at this, the 3rd drive that we should be chatting with, it would be this low from April 23rd to that high of April 26th. And all we did was make 100% move, right? We never got down to that 1.272, which would have qualified at 1261 or the 1253 out there. And so we don't have that expansion. And then from a time standpoint, and you like to not force these, John, hopefully I'm grabbing the right swing points for you. That would say really it's not until May 9th or so when we might see that. So maybe we're still going to get that. Maybe that's what the bottom is going to be. I don't know. I see where certainly gold is trying to form a bottom. Part of the problem for gold is, we talked about this a few days ago, folks, is that, if you're a trader of gold in pounds, and you just think about what's going on in Brexit, or not going on in the pound, and then we can go take a look at that. But those traders are not buyers this morning or this afternoon. They're not. They're not seeing a bottom. If they're not seeing a bottom, why are they going to buy? They're not. In yen, okay, you made a lower low yesterday. You haven't taken that out, but they're sitting on the fence. They're kind of neutral. In yen or in euros, okay, it looks pretty good out. there's not convincing evidence as we speak just yet. So gold's got more work to do, I suppose, is the answer in order to prove itself to me out there. If I take a look at the mining sector as an example, the GDX, if we take a look at the GDX, I don't have a bottoming signal yet for it. And the GDX would need to close, in my opinion, would need to close above Stevie's red line at 2084. You're at around 2043 as we speak right now. So 2084 would be the magic number for the GDX. So it's not like I can go to the GDX and find a signal that says, oh, hey, look, definitely, there's a bottom there. So so that's what I see, Peter. Everyone else, when I take a look at gold and the things to be watching and what to look for. So no questions that I see inside my email or TigerSend. So let's go talk about the general markets. Oh, I guess we're going to have to do that for the 2-minute wrap. Well, that's good. So we'll do the 2-minute wrap with regard to what the markets are doing, what to be looking for, and where to take cover. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So let's do the 2-minute wrap here. This is at 1:54 in the afternoon. Let's start by taking a look at the New York Stock Exchange, the spot volatility index, and the advanced decline oscillator reading for the New York Stock Exchange. Right now, it is slightly above zero. 1.42 is the meaning. I don't know whether we'll close above zero or not. If it gets turned down from here, the message is to be very cautious. Now, plenty of liquidity in the market. That's what you're seeing today. We know there's liquidity in the market when the spot volatility index is below the 50-day exponential moving average. So at the end of the day, you want to watch that level. Where does price close in relationship to it? If it is below 14.17 and the advanced decline oscillator reading is above zero as it is at this moment, that says there's more rally to come. If we take a look at the spot volatility index as well, right now the one-day rate of change is a negative 9.15%. If it becomes more than, or well, I should say less than, but if it's below minus 10%, so minus 10, minus 11, minus 12, or so forth, today could be marked as an initiation day. Those are the green arrows that are on my chart out here. It's worth paying attention to. So watch the spot volatility index when it comes to the end of the day. That does not mean that the bulls are out of the woods. The bulls are not out of the woods. Inside the ES Mini, we have an absolute topping pattern. It is still in play. It is still in place as we speak right now. A Rhodes momentum indicator signal singing in the key of G. Prices below Stevie's green line at 29.51. In other words, so far this is just a counter trend rally based upon that signal. If we take a look at the NQ still has its TD setup 9 count in play. It has its sell the D point of the A to B equals CD. It is not out of the woods just yet. If we take a look at the Dow Equity Futures contract, its 3 drive to a topping pattern here is still in play. It still has a topping signal. And in the case of the Russell 2000, making a gorgeous, beautiful, strong move today, it just happens to be singing in the key of G, and it's stretching. It's stretching. It's moving higher with less energy out there. It just says, be cautious. The markets, the bulls are not out of the woods. Folks, have a great weekend. Thanks so much for being here. Stay tuned. David White, your favorite polar bear's up next. Tom O'Brien, 3 to 5. Have a safe and happy weekend. We'll see you on Monday.